Good morning, America. This is Hubert Johnson with Taxes Made Easy. Thank you for watching on this special tax day today. Today's April 15th. Yay! The day that we need to have our tax returns in, everything filed, or have an extension filed. So we talked the other day about how to get an extension filed. So we're going to kind of go back to the basics a little bit. Today's topic is going to be, do I have to file? And how do you make sure you don't owe? So just a couple, we're going to talk about filing. Do you have a filing requirement? And also how to make sure that you're not going to owe at the end of the year. So there's a lot of news today about the economy, what's happening with the budget, and we're gonna take a deep dive into those topics. I think they'll be pretty informative for you. So stick around, and we'll be right back after this short break. Welcome back, everybody. Thank you for watching here at Taxes Made Easy. So we're going to dive into some news here. There's a lot of information out there about what's happening, and really most of this is not great news. Most economic is not great news, unfortunately. And this one is from Epic Health. This is a U.S. pharmaceutical drug shortage. So this is something we're trying to always make sure we have cheap, affordable drugs. And again, the Biden administration recently passed or mandated through executive action that costs be lowered. The other side of this, and this article is a little fuzzy about the true causes of why we're having a shortage. Economically speaking, though, when you look at economic models, anytime the government comes and messes with the market, shortages are usually the natural result. So if you reduce the cost of something, or you limit how much they can charge, of course, there's going to be less money, less effort put into producing these drugs because there's a limit. Now, I think there's other ways to lower healthcare costs by using the market, but when it doesn't seem like our politicians believe the economy and market models actually matter, so they go in and they try to force by executive fiat or just pass rules into heavy-handed government saying it will be this way, and it's usually many unintended consequences. So so this is coming from the American Society of Health System Pharmacists. Well, the pharmacists are the ones reporting this, that there's a shortage of 323 different medications or pharmaceuticals, and this is increased over the last few years. So July 2023, 85% of hospitals reporting this shortage, and 40%, here's the problem. So 85% of hospitals were rationing drugs, and over 40% of hospitals were delaying appointments due to the shortage of drugs to actually address these. What kind of drugs are being rationed? Oxycontin, ROGD, immune globulin, which are standard of care chemotherapy, pain, and sedation medications. And ADHD drugs. So these, especially the chemotherapy, the pain and sedation to deal with surgeries, to deal with procedures, can be very important for many people. And especially for chemotherapy patients, these can be life-threatening. One of the biggest concerns here is you have shortages and supply chain issues across the economy are cited. And then you have the FDA not approving drugs or holding off, and so there's been so much shortages. The shortages have been so bad that the FDA has actually approved temporarily some drugs coming out of China, which can be very questionable. So again, you can have people getting medication that's not up to standards. And again, the FDA has been very behind in approving medication. So what is the short fix here? I don't think there is one. I think there's no easy fix here, but I think the main thing is to understand that there is a shortage out there. Try to plan accordingly. Um, if you can use alternatives to medications, great. I take medications every day because I have pretty serious back issues. I don't sleep without taking medication. I don't sleep very well at all. Um, so it is important to many people out there going through these shortages and issues. Second article, another price increase. This is going back to California. Their minimum wage has kicked in for fast food workers. And this is really interesting that it's just for this one industry of fast food workers. They increased the minimum wage for fast food workers to $20 an hour. So when it went to $20 an hour, guess what happened? And this just happened April 1st. Now it's been a couple weeks. The first payrolls are coming through where people are actually feeling that pinch. And a lot of companies, they started making massive adjustments in anticipation of this. So first thing that happened, all the delivery drivers, anybody that was considered non-essential, were all fired. You can use Grubhub, you can use, I don't know a lot of the food delivery services. I tend not to use them, but all they were using those sources where they're not fast food employees if they're working for Grubhub, etc. So they don't have to pay the increased cost. So they just switch the labor from one market to another, but all the delivery drivers working directly for pizza places in particular lost their job. Delivery drivers that work directly for other fast food places, they're all out of a job. And again, it's more expensive to use these other services for food delivery, but they don't fall under this increase of $20 per hour. So again, you see artificial manipulations or distortions in the market happening. So people are just laying people off. The burdens are being shifted to someone else. And in general, the costs of food go up. So fast food, traditionally not a very cost-effective way, but it used to be. A lot of people, especially if you're on the run, if you're busy, if you have kids and activities, etc., used to be a cheap way just to eat food. I know I've coached many years, and it was funny. You would see all the baseball parents after a game or after a long day, and we'd be, especially a late game, we'd all be going to the local Little Caesars and getting cheap pizza because it fed the kids. It took care of this while we're all at the baseball fields coaching, managing, or helping out with the kids. But this is going to take the money out of average. Middle class to lower middle class is who it's going to hurt the most. Those that don't have as much money. So it kind of goes back and forth. There's some people that kind of anticipated, but the main thrust of this is that more automation, less face-to-face service, and higher prices. One business had it was $14 an hour in California, and right outside of California, the same item was around $7 to $8. Still not cheap, but the huge difference between inside and outside of California. One of the last articles I want to touch on today before we dive into the main topic is cost of oil, cost of gas. So everybody's seeing the cost of gas go up now. And if you're not sure why, this is going to be a political statement. Elections matter. When you have an administration that goes after and tries to restrict oil and gas drilling for years, and then increases the cost of it, it's going to drive up gas prices. It just is. Supply and demand. The more harder you make to drill or to obtain oil and gas, the more expensive it's going to be. Those ripple effects, the price of energy, are carried throughout the economy. So that's why we see cost of materials going up, because you have to import. A lot of this is being imported from China, from wood, lumber from overseas, because we've restricted how much lumbering we do here in the United States. nails, equipment, concrete, all of that costs money, all of that is shipped. And so you see the cost of materials go up, you see the cost of food going up, everything goes up in an economy when your energy prices go up drastically, and that's what we're seeing. So instead of making an adjustment with the price going up, um, the current administration just raised the cost of oil and gas on public lands for the first time in decades. Um, so this is the first time it's gone up since 1960. So again, it just there's always a cause and reaction when you increase oil prices or the cost of so it's not a small cost. So I'm just reading through this. It's a 15 times increase. So instead of 10,000 per lease, they will be required to pay 150,000 per lease. That is a huge difference, and most of that goes to the federal and state governments, and they claim they will use that money for to clean up oil messes, but also maybe it's overdue since it was from the 1960s. But right now, with gas prices already going up, expect these prices to not only stay high but go even higher when you're increasing the cost of accessing and drilling on federal lands. So it just is what it is. That expect the prices to be higher. Now, I'm going to jump backwards a little bit. This last article, this kind of dovetails into our main topic today. And this is about, directly from the IRS, it's about this new tax filing season. So this is a news release going back to January 8th, 2024. And I'm going to go ahead and share the screen. We're running out of time. But this is good information to have, especially with today being the deadline. And it just kind of goes over 2024 tax filing season set for January 29th. So we're going to share all these links online. And when we come back, we're going to walk through this, all the different ways to file, to get an extension, so that you can move forward and take care of your taxes today. You don't want to put it off till tomorrow. So we'll be back right after this next break. Welcome back here at Taxes Made Easy. Just looking through this article for 2024 tax season. And so again, this goes all the way back to January 8th. But here on tax day, good, healthy reminder, there's plenty of ways to follow up. Get your taxes taken care of. If you're not ready to file, do that extension. Go ahead and get that extension filed. So you have some of the tools. They had expanded in-person service. It's a little late to get in today, but you can still reach out to them. So you can click on this office, make an appointment, find a taxpayer assistance center, and get in there for faster service. So that's where you actually can't file your taxes in there, but you can bring everything in and get your questions answered to enable you to get your taxes filed. You have a toll-free line. Good luck getting through, but like I said, the best time to call is always between 5 and 7 p.m. Where's my refund tool? So you can use this to check on your refund status. Once it's received and approved, then it should take 5 days. Don't file a second tax return right away. This is a typical mistake. People think, hey, I didn't get it quick enough. Check and see if your return is processed. You want to give it enough time. If you file a paper return more than 6 months ago, you can go ahead and file a second return, but you want to write on there possible duplicate. That's the problem, is the IRS is good at losing stuff. Not as much with electronic, but with paper returns, they lose stuff all the time. But if you file a duplicate and they don't see that, hey, this is a possible duplicate, it can cause problems with their system. If you have 2 returns processed, it can extend out how long it will take them to clean this mess up. And again, they don't like it. It doesn't work well with their system if you file a second return too soon. And then, and again, if they doesn't show that they actually got your return, you might want to consider filing a second return, but write possible duplicate on it and give it time. If your refund is delayed, you can call and see what's going on with this. But a lot of tools here, this is why I'm highlighting this, to find out what's going on. And I do like that there's a lot of improvements here. So enhanced paperless processing, you'll be able to send pretty much everything electronically. This, I think, is key. And if you can go to irs.gov, sign on to your own online account. So if you haven't done this, do this. They are making it easier to work with the IRS. And there's a chat option. I don't think that's very helpful, to be honest, because they give bad information. But you can schedule and cancel future tax payments. You can revise a payment plan, which is new. You can validate and save bank accounts to make payments, and this is all e-verified. Very hard for hackers and scammers to go after. That is a possibility in the future, but again, it's pretty, you have to create like a face scan, you have to have a PIN. They have a lot of extra layers in there to try to verify that only you get in there. So if you haven't set up your own individual account, you might want to see exactly what's going on. So again, you can access tax returns, view and make payments, view or create payment plans. If you have a simple case and everything's taken care of, if you're trying to create a payment plan that doesn't give you that option, you might want to contact a tax professional. But again, I think more and more people can set up simple installment agreements. That's ideal. Again, it's not, we try not to do stuff for people that they can do themselves, but if they need that comfort, they need that help, we're more than happy to help. But I think it's great that the IRS is making some of these options more available. View your balance, see the payments that have been made, and see what authorizations you have. So again, April 15th today is your tax deadline, unless you're in a federally declared disaster area. So again, this tells you by year all the different announcements and the changes in dates. So Maine, Rhode Island, Maine, anybody affected by the terror attacks. We've covered a lot of these, But Alaska, Hawaii, haven't seen that yet, but Spokane, I know, in the Michigan, West Virginia. So there's a lot of them that have already popped out this year. If you're in a disaster relief area, it is by county most of the time. So, and then it tells you how do you prepare, getting your documents. We've covered that more in depth. But use the IRS.gov. Again, they do have a tax assistant, can help you with some things. They do have connections to tax pros. Doesn't mean that who they refer is going to be a skilled. They've just gone through the steps to get on that list. So they have VITA centers that help with free tax help. This definitely helps those that are under 64,000 and adjusted gross income, elderly taxpayers, 60 and older. And again, if you have a simple return, they'll help you. Again, then you have nil tax helping for military veterans or the military. Right now, we're right here. Due date, Maine and Massachusetts, it's April 17th, a couple days later. So get those extensions in. My biggest concern here, so when you file an extension, you can sit there and breathe, but don't wait. I know CPAs, tax preparers, they're going to take a couple weeks off. Some take a month off and go put their feet in the sand somewhere and go. They disappear for a month because they work like crazy to get all these tax returns done. That's fine. Give them a couple weeks, give them a month, but schedule it out. When they come back, that's when you want to be making sure your tax return is getting worked. That's when you want to make sure that things are moving forward, and you do not want to wait till the next tax deadline, either September 15th for businesses or October 15th for individuals. There's no extension there. And if you don't have your stuff together by then, you're going to be in trouble. So make sure you get ahead of this, stay ahead of this. This is how you avoid or not filing tax returns or having problems where you have delinquent returns. This is how you avoid also owing taxes, because you want to prepare. You want to make sure that you have your payments in, so that way you don't get hit with penalties and fees. So moving to today's topic. We really wanted to talk about a couple of things. So, how do you make sure you don't owe? Or how do you know if you need to file your returns? So really it's a little more complicated than you would think, but the basic rule of thumb is you look at the standard deduction for the year. Did you make enough money? So for 2023, standard deduction per person was $13,850. As long as nobody claims you on your return. So simple, as long as you didn't make more than $13,850. Now, what income qualifies for this? This is something that gets a lot of people. And I know I've mentioned this before, but any kind of wages, any kind of income that you received that was not post-tax. So, for example, any 401k income that you start drawing off of, IRAs. I mean, this is what gets a lot of people, is that they'll pull a big chunk out of their retirement. They retire and they say, okay, now I can take that money. It still counts as taxable income. So even though you might be retired on a lower income, if you take out $40,000-$50,000, that's all taxable in that year. So the idea is, ideally, you just take it monthly, and you just take out what you need, maybe $1,000 a month to supplement your income, so that only adds $12,000 in a given year, and that is spread out over time. So there's no one big tax hit. I've seen that we help too many people where they take out a huge chunk of money and get hit for the taxes in it. I'm retired, I can access this money, or they just move it around, but they don't do it correctly, and it's shown as a gain to them. So again, now the way that it hurts people not knowing what kind of tax implications face you. So Social Security, absolutely taxable. People pull their hair out and say, why is that taxable? Because the government can. So if you are bringing in less than $13,000 a year, you don't have to report it because it's withheld under the threshold. Many disability payments are not taxable. So veterans' disability payments are not taxable. Anytime you have compensation for a physical injury, it's usually not taxable because it's making you whole, or trying to make you whole from that injury. But again, check with each payment. Be very, very careful when it comes to personal injury cases because it depends how it's labeled. If it's compensation for your injury to pay your medical bills, etc., that's usually not taxable. Any kind of pain and suffering, any kind of punitive awards, those are all taxable. So be very mindful that you might take a huge hit on some of those taxes. So $13,850 for 2023. It's not a lot of money. For two people, it's $27,700. So that's just over $2,000 a month. Now, if you have your home paid for, if you have, you might be able to live off to that. If most of your bills and expenses are paid for, and you can just live comfortably. But again, that's usually you're in the poorhouse for most individuals if you're living off of $2,000 a month, especially with costs skyrocketing the way they are. So, and here's a caveat here. If you're self-employed and you make more than $400, you're supposed to file. Is the IRS going to go and dig somebody up that had, less than that? If you made $12,000 a year, are they really going to come and audit you? Probably not. But technically, you're supposed to file. So here's an interesting one. If you are married filing separate, you have, if your spouse itemizes, you definitely need to file your return if you have any kind of income, because they're taking all the household expenses and itemizing it so the other person doesn't get any. If the other person who's filing separate and one person claims a standard deduction, you can go off the standard deduction. If you didn't make enough for that, you don't have to file. But again, there's a lot of do you have to file or not really gets into the nitty gritty of how much do you earn. If you're self-employed, you most definitely have to file. If you're a U.S. citizen or permanent resident, you need to file and report that income. So that is a very broad net out there. So again, one of the things to be very careful with, and I've touched on this before, is state returns. Don't forget the states. And if you lived in California and New York, especially California, and you leave, usually most people leave mid-year, something like that, it is very handy to file a final return, even if you didn't have sufficient income, and it's a final 540 NR, non-resident return. And what you're telling the state is, I've left. I'm no longer there. Don't try to file taxes on my behalf. Because this happens all the time when people leave a state and they don't file a closing return or a final return. There are plenty of states out there that will file for you and then surprise you with a tax bill, and then you have to go back and argue and say, look, I didn't even live in the state. So that's something that definitely hurts a lot of people. If you're a dependent, so it goes into the dependent rules, and it kind of really breaks that down. But again, there's charts, you just need to, so the article I'm looking at is just check if you need to file a tax return. If you go to the irs.gov, and I'm just going to share that screen right now. If you want more detailed information on that, here's the article, the actual page. Check if you need to file a tax return. Pretty simple, and it goes step by steps what you have to go through, and it kind of gets it. There's all kinds of links here. Um, so again, if you don't have a filing requirement, I would always pull your transcripts later, see what the IRS has on you, see if they have something, see if you forgot something. One of the things that can definitely cause problems, if you get mortgage interest and you're not filing a tax return. Is someone else paying the mortgage? Is there another fund here? Who's paying the mortgage? That's a question the IRS might ask. So, well, they do ask in the States as well. So if that's what you're experiencing, I would highly recommend filing a return just to answer any questions so they don't come back and try to file for you later. Because they don't have any income on you, but they will definitely ask and say, okay, how are they paying this mortgage? So, any questions is, do I need to file? Get that extension in. If you're not sure, just go ahead and file. You never know, you might get a refund back, especially for some of these older years, 2020 and 2021. There were stimulus funds that you should be getting if you haven't ever filed the returns, for especially for 2020. That deadline is coming up, I believe it's May 17th. So again, if you, in most cases, it helps to just go ahead and file. And if you owe taxes, you'll still get those funds. I think it was $1,000 for 2020 and $1,600 for 2021. You'll still get those funds sent to you in a refund, as that's how they structured it post-COVID to help everybody out. If you have any questions, give us a call, 520-485-7371. And then you can reach out to us through guardiantaxlaw.com, check out our website, or you can go to irs.gov. I get a lot of information directly from irs.gov. Don't hesitate to go there, get good information, and be informed. It can always help. And I actually think it's commendable when people get familiar with irs.gov and how to move around and get information. You just have to remember that information is coming from the IRS's perspective, and it's not always both sides of the story. They're not going to help you figure out how to save money all the time with the IRS, but they are definitely making those tools more comprehensive and better to make adjustments to get on there and help your case. Now, part of that requires being computer savvy. In our last session, we're coming up on another break. Really want to focus on how not to owe. So, personally, we've got this new bill, the estimated tax payments. The good old Congress in their infinite wisdom increased it up to 8% penalty for not paying sufficient taxes or having sufficient withholdings. So I went and I had sat down with my office manager last week and we pulled our numbers. We were using QuickBooks, so we can pull our profit and loss up to date pretty much anytime we want. It's very handy, helps us plan, helps us know what's going on with our business. We saw what the profit was, and we cut a check, or we made an online payment. I think I just made it online, and I had to pay for my quarterly tax payments. That's going to be very helpful come the end of the year, and we're going to do a deep dive into this when we come back, but we're hitting that break, and really stick around. We'll be covering that shortly. Welcome back, everybody, to Taxes Made Easy here on the smartmoneyculture.tv. Thank you for watching live on rebroadcast. So I've been getting this question as I've been trying to get the word out that the IRS increases penalty up to 8% for underwithholding, underpayment of estimated taxes, or underwithholding. Now, so the IRS came out and they increased the tax, but I have people keep asking me these questions, and so again, many people, they hold on to their money all year long. They consider giving the money interest-free to the IRS because it's not technically owed until April 15th of the next year. So I'm not sure exactly how the IRS is justifying this. But there's always been a penalty for not paying sufficient estimated taxes throughout the year. So most people, they have it withheld from your W-2 income, and it gets paid in all year round. So to try to put and businesses on the same footing, you're supposed to make estimated tax payments. Now, again, if you're paying at the end of the year and you pay it off in full, that's been fine typically, but now they've issued this 8% penalty, increase it up to 8% of the total amount owed. And that's on top of any other penalties and interest you might have. So that hurts. That can definitely hurt a business. So it takes away, if you're paying 8%, you're lucky to get that in any kind of investment today. So you're really not making money if you're paying 8% on it. So again, people have been questioning me on this. Why do I have to do this? Well, it's the government, it's the IRS. If you don't like it, talk to your representatives. So how do you address this? First of all, have your bookkeeping put together. If you're self-employed, have your bookkeeping in place. Make sure that you know what's going on, what your net profit is. So I already made a payment, pulled up my profit and loss, was able to look at it and say, okay, this is what we're looking at. Now, at the end of the year, I'm going to be looking closely at how much have I paid, what does it look like I'm going to pay, and I'm going to be adjusting that so I'm not overpaying too much. But that's an adjustment I'll do later on in the year because I want to be ahead of the game. I want to make sure that they're not showing that I owe taxes. So I'm going to go ahead and share the screen. This last article directly from the IRS. And this is underpayment of estimated taxes by individuals. And this is talks about the penalty. This is how they calculate the penalty, but really wanted to go to estimated taxes. How do you pay it? Who must pay it? So individuals, sole proprietors, shareholders. If you're going to owe $1,000 or more to the IRS, if you're going to owe more than that, you have to make estimated tax payments. For corporations, it's 500 or more. So 1040 ES, estimated tax for individuals, is how you figure it out. And how much to pay. So this talks about how to pay. But if you're paying, and I'm not even seeing it here, but if you paid 90% of what you owed for the previous year, they're not going to question it. What happens if your income goes down? Then it just has to, as long as you don't owe and you're withholding based on your current year income, you'll be fine. In my case, we have more profit than last year, and hopefully that continues. But so we increased our estimated taxes that we paid, and that we're going to continue paying quarterly. So you can submit those by mail. You can pay it online. We just paid by going to irs.gov account. So this is just part of the problem though. So this just talks about estimated tax payments, and this definitely focuses on businesses, sole proprietors, people where you're getting sources of income that isn't tracked. Now, one of the problems here. Normally, you don't have to pay estimated tax if you're having sufficient withholdings. So again, the tax withholding estimator will help you figure out the right amount of tax. So if you didn't have tax liability for the prior year, and your prior tax covered a 12-month period, you should be fine. But if you owe at the end of the year and you didn't have sufficient taxes withheld, then you can get hit as well if you're a W-2 employee. So a lot of people will mess with those withholdings to have more money in the short term, and it just burns them down the road. They become my clients. And I joke around about that. But again, you can use the 1040 ES. You can go talk to a tax professional. And again, you have 4 payment periods. Guess when the first one is? April 15th. So having enough taxes withheld or making quarterly estimated tax payments, it not only helps you avoid tax problems, but if something does arrive, they can show that you have been paying regularly. So first tax deadline, April 15th for the first quarter, January to March. Now this gets a little funky. The second one is just April and May. It's only 2 months, so the next tax deadline is June 15th. And then they go from all the way to June to August. So June, July, August, and then the last one is longer, September to December. Gets paid on January 15th of the next year. So this can trip people up. It's not exactly 3 months every single time. So you get 3 months here for the first quarter, 2 months in the second quarter, 3 months in the third, and then 4 in the last quarter, January 15th. So again, if any of the dates fall on a Saturday or legal holiday, it's always the next Monday or the next business day, because you can have a holiday on a Monday too. So be mindful of these dates. If you are self-employed, the IRS is coming after you people more than ever. The penalties have gotten worse. And if you do have a tax situation, they're not going to give you a resolution until you show that you're not going to owe moving forward. So again, this is something I've hammered on multiple times, that it is more important to show the IRS and the states that you're on top of it, that you're not going to owe moving forward. Because if they show that you're going to continue to owe, they have no incentive to give you a deal, because you haven't learned. You're just continuing to make the problem worse. You continue to compound the problem. So it's like most legal cases. Have you ever heard the phrase, put down the shovel, stop digging yourself into a bigger hole? Yeah, if you're continuing to owe taxes and you don't have your payment compliance and your filing compliance down, they're not going to give you a break. So this is how you stay payment compliant. And even if you're a W-2 and you haven't withheld enough for the first quarter, go in and make a payment. Get in that habit. Post these dates somewhere. Again, don't be surprised by June 15th. It's not 3 months. It's only 2 for the second quarter. And then we can go from there. So here's some other publications specifically on estimated tax payments for individuals, merchant cards. Now, be aware there are other things that aren't recorded and submitted to the IRS in a nice, clean manner like this quarterly. If you have investments and you make money in the stock market, do you have to pay quarterly payments? Yes. If you have gambling wins or losses, do you have to track that? If it's losses overall, no, you don't have to. And most people are losing money, but there are people out there, professional gamblers, that make quite a bit of money at gambling. You need to pay that. You have to be on top of it. You have to treat it like a business. You have to know how much you've won, how much you've lost, the costs incurred, and that career, because it is a career for some people. So whatever you're doing, make sure you're keeping track of those costs. There are plenty of programs. There's even apps to help you with mileage today. There are so many helps out there. If you have questions, give us a call. You can reach out to CPAs, financial planners, even business coaches can help you track your expenses so you pay less in taxes. And the thing is, if you're paying more in taxes, if you're paying too much in taxes and you don't have that put together, it can make it unprofitable. It can rob you of your assets. It can cause so many problems to owe taxes. So it's not worth it. So one takeaway I hope people really get out of what I'm trying to share is be market savvy. That's why I talk about the economy. That's why I talk about what's happening in the world, because it's important to know and be informed of why prices are changing, how to prepare for it. So I was talking to my wife the other day, and we budget every month. Do we like it? No, we hate it. We don't like budgeting, but we do it because without that, we would be spending way too much money, and we wouldn't know where our money's going. So this month she looked and she said, "Look, we're only have so much money left in our food budget. Where is our money gone?" And it's when our kids don't. We're going to blame the kids here, where they haven't prepared meals, and they've dropped the ball. They haven't pulled out a dish and prepared a meal. So we're not cooking at home when we started eating out a little bit more. And again, with the prices of everything going up and up, it's if you're not keeping track of where your money is going, you're gonna, especially in your business, then you're going to be losing a lot of money, and you're not going to have good control of what's going on. So again, final note here, learn from what we're sharing, develop better habits, and it will save you so much time, money, and heartache. So if people listen to me and what I'm sharing on the show, I'll get less business. But again, we're not worried about business on our end. We're worried about helping people out. So again, if you have questions, don't hesitate to reach out. Call us at 520-485-7371. Look us up. You can watch these videos on YouTube. Our website's guardiantaxlaw.com. YouTube channel is just Guardian Tax Law. And get informed. And there's plenty of help out there for you. We can find local help for you. Even if no matter where you live across the country, you can usually find someone to help you out, or a business coach or a financial advisor to help get a handle on your expenses. So don't forget, if you haven't made an estimated tax payment today, go ahead, get it done. Again, as long as it's 90% of what you had from the previous year, they won't bother you. They won't ask any questions. Get your tax returns filed. I checked myself on our tax return. They're not going to get filed. So we made sure extensions were filed, and they've been filed. So we're fine for now. But again, I'm going to take my own advice in a month or so, after the CPAs and tax preparers have been able to breathe a little, that I'm going to start following up with them and say, okay, let's get this done. So again, this is a happy tax day. A bit of an oxymoron. But be informed, know what your rights are, and looking forward to another, hopefully, productive year for most people. And that's the thing, in a down economy, a lot of people are going to struggle. But those that plan, those that prepare, those that have their act together can survive tough times and come out even stronger when the economy rebounds. So I don't think I have anything. Just a final note. One of the great things for us is when we see people that come in and they're in a world of hurt, they're struggling, and then they put their business together and they figure this out. And that's really our long-term goal, is that we see people where they turn their business around, they figure things out, even after dealing with massive tax issues, and they find that they come out much stronger, much leaner. They know what's going on with their business, and they can be successful in the long run. And I think that's a public service that we try to provide, not just helping people resolve tax debt, but helping people come out more business savvy. They learn from this experience, and they can tackle any future debts or issues that they have. And really that's the why of why we do this. And our overall goal for each client is to help them learn and grow as we go through the process. And part of this is learning to use irs.gov learning to go to set up your own tax account, access and find questions for yourself. But I had a friend of mine, just last week, called me up and he had a simple filing question. He was looking online, he was looking up articles. You know, he's an attorney. He's a smart guy, but he couldn't find the answer. And finally called me up. He's like, I didn't want to bug you. Like, you had us over for dinner the other week. I mean, you can bug me. And so he called, simple question. We answered it in about 30 seconds, and he was very thankful and grateful. I'm like, just call me when you have these questions. And, you know, that's this public service that we provide, giving back to the community. Hope you have a great day, and look forward to seeing you all tomorrow.